The diplomatic dance begins. Greece's Prime Minister Antonis Samaras kicks off a European charm offensive today with Eurogroup President Jean-Claude Juncker. Samaras is expected to raise the idea of Greece getting more time to push through reforms, toning down demands for another 2 years, trumpeted after May's elections. Shuttle diplomacy this week very much fueling hopes of a breakthrough in the Eurozone debt crisis, as well as Juncker's trip to Athens. Tomorrow, the leaders of France and Germany meet in Berlin. And later in the week, Samaras also heading for Berlin and Paris. And on the macroeconomic front, Germany sells 5 billion euros in 2-year notes later on today. The paper is offering a zero coupon. And the equivalent is trading with negative yields on the secondary market. Let's talk about all of this with Gustavo Bagattini, European economist, RBC Capital Markets. Morning to you, Gustavo. I guess we've got to start with Greece. 2-year extension seems like a very big ask. What is RBC Capital Markets' take on this?
Good morning, Axel. I think that the first thing, which is this idea that more time is different from more money. I mean, that's a red herring, right? More time means that essentially Greece would need to bring forward about 20 billion worth of funds from other places. Now we get a picture of where that might come from, which is from bringing forward some of the IMF expenditures and delaying some of the repayments to the IMF, as well as not rolling down the bill stock as the bailout program expects the Greek government to do. Having said that, I don't think it's necessarily a major ask, but I don't think it's going to come quite yet. I think the key thing for the Greek government is to reestablish some credibility that it can deliver on the fiscal measures, that it can deliver on structural reforms. And until you have that, which we won't see the sketches off until the conclusion of the first review, we're unlikely to see this charm offensive work.
The French cabinet meets for the first time since the summer break today. This is key because of the Hollande-Merkel meeting, right?
I think there's two issues. One is reestablishing the French position and hopefully getting more convergence in the Franco-German positions for what's going on in the euro area, not just with Greece, but also in terms of the wider sketches about the future of the monetary union, the banking and fiscal union that we're due to hear back on in October with Van Rompuy's interim report. But also what's important is domestically for Mr. Hollande is getting together the sketches for his draft budget for next year, where he's going to have a difficult balance to play between meeting the 3% fiscal target that he has set on, and also keeping happy the broad base of his political support.
I mentioned the German auction. I want to leave that aside. I want to talk about the PMIs tomorrow. What are we going to see in these PMIs?
Well, I think the PMIs will give an indication of the weakness in Q3. The July figures on their own were consistent with GDP falling by about 0.5% in Q3, which is substantive below what many of the international forecasters, what the ECB has, and basically is just a question of how much these continue to show weakness due to the negative feedback loop between what's going on in the sovereign crisis and the real economy. Having said that, the PMIs have been overstating the weakness in terms of what's going on in the real economy. So we think even if we do have a substantively sub-50 print tomorrow, that Q3 GDP growth is probably still going to be just south of naught, and the euro area will fall into technical recession in Q3.
Okay, Gustavo, thanks for talking with us. A lot of news coming out of Asia this morning. Let's start with a second half profit slide at BHP Billiton. Here's Reuters' Tara Joseph in Hong Kong. The $20 billion Olympic Dam project on hold. Tara, how bad are these numbers at Billiton?
Well, the results are not good. H2 profits down 35%. But as one analyst said, there's no nasties in the earnings. It was expected to be bad. Big commodities slowdown in China creeping into the earnings. They do say the picture is supposed to improve, but only slightly.
More signs of the global slowdown with a slump in Japanese exports. How bad were these numbers?
These were very bad. These were sort of the jaw-dropping numbers of the day. Exports to the European Union down 25% in July. To China, they were down nearly 12%. And all of this adds up to a very bleak export picture for Asia as a whole, and sort of signs that the global economy is not ticking very well in terms of demand. So it starts those wheels turning about the global recovery, I'm afraid.
And let's get a final comment on Foxconn. Working conditions there for those who put together iPhones and iPads has been a story we've been running for a while. Are things getting better?
That's right. Now, remember, this is the place just over the border from where I am in China, where there were 14 suicides and things were really terrible. The latest report saying things have improved. There's netting outside the dormitories, but actually pay has increased and things are a little bit better. But they do say that overtime still needs to be cut down. There's so much demand for these phones. They're churning out the overtime, and that is still a worry. So we'll hear more about this in coming days.
Okay, thanks a lot, Tara. Other world news on Reuters this morning. Ecuador's President Rafael Correa says Quito is ready to negotiate with the UK over the fate of the WikiLeaks founder Julian Assange. Correa has told Assange, who's trying to avoid extradition to Sweden on sex charges, that he's welcome to stay in the Ecuadorian embassy in London indefinitely. And Heineken increases its stake in Tiger beer maker Asia Pacific Breweries by another 2.68%. The Dutch brewer wants to consolidate its place in the Asian market and is bidding $6.35 billion for APB. The latest stock purchase is from the Singapore sovereign wealth fund Temasek. Heineken also forecasting flat full-year earnings. On this day in history, in 1972, Rhodesian athletes were banned from the Munich Olympics just 4 days before the opening ceremony. The country, now Zimbabwe, of course, was expelled on grounds of being an illegal regime. Other African countries had threatened to boycott the Games. That is it. Our picture of the day shows a teleprompter obscuring Barack Obama as the US president speaks at a campaign event in Columbus, Ohio. Obama is on a 2-day election trip, also taking in Nevada and New York. I'm Axel Threlfall. This is Reuters.